Well, neutral is a very long-term concept, so it's useful in terms of framing the discussion, but at the end of the day, when you have to take decision, it's not that useful. The way I look at it basically is whether rates are negative or positive in real terms, and they're still negative in real terms. And frankly, on the basis of our base case, which is now more or less a technical recession in Europe, I think we are going to have to go real positive somewhere. Where is not clear. I mean, we haven't had that for 40 years. Our models have been calibrated with low inflation for 40 years. The last oil shock in 2007 was followed by a recession and low inflation. So basically, models tend to tell us, even if you don't do much, you go back to 2 or a bit more than 2. And then we look at the past, we look at other experiences of inflation, and typically it looks like you need to go for real positive to get that under control. But a lot will depend on what's going to be the impact of the slowdown of the economy, probably a technical recession on inflation. But again, my take is we most probably will have to go to real positive somewhere.
So you would envisage, just to try and put some numbers into the frame, you would envisage at least 150 basis points before the end of the year, and then let's see what follows.
Well, I don't want to be too specific about what's going to take place before the end of the year. And of course, there is a bit an issue real based on which deflator, but I think we will have to go most probably above two. And, you know, we've been claiming that what happens in Europe is different from the UK, from the US. But over the last 6 months, basically the direction we've been taking was not that different. My bet would be it's going to be over 2%, and I would not be surprised we have to go to above 3% at some point.
But there was clearly an aha moment or an epiphany at some point this year, maybe around the April meeting, it seems to me, when suddenly the council just decided, you know what, if we don't do something now, we are going to be behind the curve, and it is time to act. So what was it that was the catalyst for that? The fact that you could offer up the TPI at that point to provide some, perhaps...
Numbers consistently came with surprises, inflation. You know, for a while we could say, okay, core is around 2%, it's mostly about energy. But then now we have core at 5%. But the trend was clear, I think. My epiphany came a bit before, because I guess I said at the beginning of the year that the first 200 basis points of rate hike would be a no-brainer. But of course, we come from, you know, a forward guidance that was very demanding in terms of getting out of a supportive monetary policy. So we had a number of steps to follow before going for hikes. Now we say we are going to be front-loading, but I think, I mean, it's a form of catch-up what you are doing now. And again, the uncertainty of where you have to go to get this inflation under control is not clear, because it has been 40 years, you know, without that kind of experience in Europe.